The collapse started with a number so large it didn't seem real: $65 billion. That was the amount connected to one man, one investment firm, one story that fooled the world. His name was Bernie Madoff. For decades, he was trusted by investors, banks, and financial institutions everywhere. He wasn't an outsider. He wasn't a reckless trader. He was part of the system. Madoff had been on Wall Street for years. He helped build modern electronic trading. He even served as chairman of the NASDAQ stock exchange. That alone made him seem untouchable. Investors believed that if Bernie Madoff was involved, their money had to be safe. His firm promised steady returns, not huge gains, not risky bets, just consistent profit, month after month, year after year. That consistency is what made people trust him. Real markets move up and down, but Madoff's numbers barely changed. Accounts kept growing. Statements showed profits. Clients stayed confident. Wealthy families invested. Charities invested. Banks invested. Some people placed their entire life savings into his fund. And the longer it worked, the more impossible it seemed that anything could go wrong. Part of the attraction was how exclusive the fund felt. You couldn't just walk in and invest with Madoff. You had to be invited. That made people want in even more. If access was limited, it must be valuable. If powerful investors trusted him, he must be legitimate. Large banks worked with him. Financial advisors sent him clients. Major institutions recommended his fund. His reputation became stronger than any proof. But behind the scenes, there was no secret strategy. There was no complex trading. There was no investing at all. Madoff was running a Ponzi scheme. New money coming in was used to pay older investors. As long as new investors arrived, the illusion stayed alive. Statements showed trades that never happened, profits that never existed. The paperwork looked real. The reports looked professional. The story sounded believable. And for years, that was enough. Some analysts were suspicious. The returns were too smooth, too consistent, too perfect. One analyst spent years trying to prove the numbers didn't make sense. He believed the strategy Madoff described could not produce those results. He sent warnings to regulators, to banks, to anyone who would listen. But nothing happened. The reputation was too strong, the trust was too deep, and the money kept flowing. Billions turned into tens of billions. More investors joined. As long as people believed, the system survived. Every Ponzi scheme depends on one thing: confidence. As long as confidence stays high, the illusion can last for years. But when confidence breaks, everything collapses. In 2008, the financial crisis hit. Markets crashed, banks failed, investors panicked. People who trusted Madoff wanted their money back. Withdrawal requests started coming in faster than ever before. For the first time, more money was leaving than coming in. That's when the problem appeared. Madoff didn't have the cash, because the money was never really there. The accounts were fake. The profits were fake. The stability was fake. The entire system started falling apart. Investors called. Banks asked questions. Advisors demanded answers. And for the first time, Madoff couldn't keep the story together. In December 2008, he confessed to his own family. He told them the business was a lie, and it was finished. His sons reported him to federal authorities. The next day, he was arrested. The news shocked Wall Street. Investors couldn't believe that someone so respected had been running a fraud. The losses were enormous. Retirement funds disappeared. Charities shut down. Families lost everything. Some investors had trusted him for decades. Their savings were gone in a matter of days. Investigators uncovered one of the largest frauds in financial history. Billions of dollars had never been invested. It was all part of the scheme. Madoff pleaded guilty to multiple federal crimes: fraud, perjury, money laundering. He was sentenced to 150 years in prison. His name became a symbol of financial deception. The scandal changed how regulators looked at fraud. Warnings had been ignored. Red flags had been missed. Questions had gone unanswered. New rules were created. Oversight increased. Trust became harder to earn. But the damage could not be undone. Because the biggest danger was not greed alone. It was belief. People believed the story made sense. So they stopped asking questions. And when nobody asks questions, a lie can grow for years. Bernie Madoff didn't build the biggest Ponzi scheme overnight. It grew slowly, quietly, inside the system. And when reality finally caught up, everything collapsed at once. Madoff wasn't the first collapse, and he won't be the last. If you want to see how other empires fell apart, watch the next episode of Boardroom Fallout. Another breakdown is already waiting.